Okay, great. So what do we see here? Right? Markets don't like it when the big bad Fed wants their money back. Well,
Exactly.
that's true. So look what he posted for 1 minute boom. RGL dominates yet again. Sell side at 25 gave us a massive $3,000 per contract swing profit with zero drawdown. And I still wonder how many were on board. Dollar bits after the Fed minutes dominating the gold market this morning, led by real yields. So obviously real yields are going in the opposite direction of uh, of gold, and gold just went straight north, I believe. If I just where is my gold USD? Just did exactly that, and look now what did we say we wanted to buy somewhere around this 59, right? So this was our free basically, or free point after this liquidity run somewhere in here. This is our free point. Now it looks a little bit better, right? I had some rejection of the low. Just look at the 5 minute, it looks even better. Nice pin bar coming into this level, and already a nice rejection. So we need to be careful with this one because this could be a good buy, you know. But since we have this little strategy because we're new to the markets, right? Ray would just straight buy into this 3 point here.
Yes.
And we're not that good because he has all the flow tools to help him out. We don't actually. But this whole move looks like a level 2, you know. So we could, of course, look at the same thing as Ray, but what I would like to see now is a balance area forming, right? So this will be our balance area for the time being. This is somewhere around our 50. I'm just drawing because I'm going to delete all this stuff later on. And this EMA should be going down, and this should be actually going up, bouncing maybe again from this year back to 50, and it should just come close to the EMA, you know. So we know, okay, there might be a trend of change, and once we're above it, we can start to look for buys. So this is what I would like to see, at least for the moment. But okay, let's go back to the oil market. The oil market. Yeah, let's take not the let's take this oil market because it's the same. If we take your market, you know, you're trading, I think it's crude oil in your market. So just it's crude oil
Yes.
futures. That's your market. And no stare food screen. It's actually just the same. If you look on a 5 minute, it should be the same, of course, because otherwise it wouldn't make any sense, right? It has to
Yes.
be the same. So great. Let's start off. Let's see what Ray first says about the oil market so we can make a picture of it. Bonds, Fed, equities, bonds, ES, oil RGL here, 77, 75, 77, 80s. So what we're going to do is we're going to mark out the 77, 80s where we're currently at 77, 80s, right? So it is the RGL and 77, 75s. This is our kind of our oil RGL at the moment. So we just marked it out with a blue box basically. Like I always like to mark out a blue box, you know. So first I'm always looking what Ray is looking at because most of the time he's right, you know. So if he says
Yes.
there's an RGL and an RGL is just buy side, sell side, it means you have to trade it together with value, of course. And then I did keep trying to get you understand the short option on oil versus the short-term bulls. Well, it paid out if you stuck to your guns. Perfect trades, 78.50s. Oil short, really in demand, dollar weakness, but recognize the underlying macro. So I will have to take out my files because I have some oil values. I just need to find them real quick. I have a lot of stuff in my order, you know, so until I find all these oil values, it will take me a little bit.
Yes.
But it's not much. It's not really not that difficult because it's mostly just a spread and it's easy to see it. So let's see, where is it? Here it is. Okay, nice. So supply and demand on the macro and the calendar spread on the macro. Okay, these are the two lines we probably will need. So let's look at the macro basis, of course. So in terms of macro, we just look at the 1 hour first and just say, okay. we take the last, let's say 14 days, 9 days, these are the last 14 days, we're pretty bullish, right? But we still need to kind of mark out the big swings, like bigger swings, because maybe we want to take a bigger shot on the oil, you know, so everything might be possible. And of course, what we have to do is mark out our big figures. This is if you want to trade a macro basis, of course, we need our big numbers. So big numbers are the 80s and the 75s in this case. And this makes sense actually. Let's delete this for a moment and just focus on, I will just let this box on here for the time being. And let's look at it from a 75 to 77.50. 77.50 is also, so this would be basically 50 from this swing high, of course, to this swing low, but since it's the current market range, we just have to work with what's given here, right? So we have swing high here, which is liquidity. We have a swing low here, which is, of course, liquidity. And the 50, obviously, is surprisingly the 77.53, right? So this becomes our 50. So we're above the 50, so we're on the weekend. So we're not looking to short at this price at least, because we know price could go all the way to this liquidity first, maybe take out the 79, maybe, just maybe, I'm not sure. But what we can do is now put the CL, compare CL1 minus CL2. We can take this, great. Awesome. This is the calendar spread, and we can take the calendar spread on and we can put an DMA on it. I hope it works because maybe I have too much indicators on the chart already. So I will just get off the VMA first, that indicator, and I put the VMA on it again, just on the crude oil, and I will just smoothen it out a little bit, make the line maybe something like black and more visible. So we get a little bit of a bigger picture, you know. So when we go to the 15-minute, we try to be always in line. Okay, I mean, it looks kind of choppy, but this, or maybe we can change the settings to 16 or something, so it smooths it out. But there is no real trade at the moment. So of course there's a macro probably if you look on the 4-hour. Obviously there's a big macro, right? If you look at this curve is way down here at this low approximately. It was already dropping off beforehand. Now we're just seeing the rise. So previously I told you about this order block, I believe. So we could actually just take this blue box and mark out this order block because it should have some significance, you know. So when Ray says, okay, he wants to short, and let's say we want to short as well, because what we just did, this is actually really good. This is actually a really good trade at the moment. Look, we just had the 78s, right? On slightly higher volume. And the volume was what? It was declining, right? It was declining.
Yes.
On the way up. So this is a seller's auction. So of course, we're not going to short it just because it just hit the level. We just need a little bit more confirmation. But our confirmation, yeah.
In this situation, can we find major move from high time frame? So we should know that where price is heading for.
A measured move.
Yes.
So we can take obviously the small measured move, which happened from here to here, and you see it's approximately in here. It's not perfect, but it's coming close. So, you know, it's coming really close, which is already good. So we can start to look at it and say, yeah, we wait for just, we just wait for some confirmation, you know, but we could try to work in some short orders actually. So it's not like we're not able to do that, right? We can just look pin bar. You see, we already get the pin bars in. For example, if I take my other chart on, got some bit of. By the way, you see what happened to the Nifty from this pullback. It made another higher high, right? So potentially you could say, hey, you know what? there was this order block, and that was the origin, right, from this move. So you could just
Yeah.
use some basic ICT structure, and I don't know if you have taken it. I don't believe you've taken it, but you see, this is the thing. Maybe when it pulls back, right, like this, you could have waited until it comes above the 50. And once it's above the 50 and you see these red candles, and by the way, this was the BSG squeeze because it's the last candle, it's last red candle prior to the run, right? So, or this one here really depends, but doesn't matter, it really doesn't matter. So whatever, let's take a look at gold for a second. Okay, still at the bottom edge, good. I have a different indicator here, which is H vol, and it just is an indicator. It shows you the heat map basically. It shows you bigger volume even, you know. But it also see the oil short right now, man. It's just evolving now. So maybe we have a chance to get in on the trade because it is at an 4-hour order block, right? So what we can do is start to work into these highs. If it comes higher, of course, now our sell opportunity is just gone and we have to wait. But there's this RGL here, right? So this is an RGL. I would just mark it out as a box, I believe. I would do it like this. And you see the H wall, it shows you significant volume and not so significant volume. So basically this is a low volume period, obviously. The market is low liquidity, that's why it's trending. But coming into the top edge, into a wholesale key level, you see it gets yellow slowly. So there is a little bit more volume in here, which is good. So this is what institutions, of course, need. They need volume at higher prices. And of course, we don't know what they will do. Maybe they will do this 1, 2, 3 fade, right? But this is something we're looking at. So we want price to go higher to go short, actually. So let me see. Yeah, right now Ray just posted something that he pretty easy lean against the top edge. He actually sold the top because he posted it right now. If you just look, here he just sold the top on oil actually. So just as we were talking about, probably he was talking about. He was even look, he even posted oil dealers bought some oil at 77.50s. So we couldn't sell the 77.50s because dealers bought some. You see, he got these candles here, you see, and this is voltic. It means there is just a speed of order. So many people are ordering stuff here, and probably what they're gonna order, they're gonna try to offer the market. They're not going to try to bid it. They won't try to buy the 78s, right? So it doesn't make sense. Why would you buy 78 when it just broke through? Maybe if you're a hedger, okay, you can buy 78, but most of the time it's gonna be selling in some form. I mean, it's not much, right? It's just 3 candles. But for Ray, this is $200, and of course he's trading I don't know how many lots he was trading. Let's see. He was trading 10 lots, right? 10 lots, 10 contracts is pretty big. Especially on oil. So yeah, we just wait for the 1, 2, 3 fade, just as we wait for the 1, 2, 3, maybe 4 fade on gold, right? Because if I just take gold now into this picture, and you see the heat map is actually showing this big volume here. But what happened is we kept sell side below it, right? So we could never possibly buy it. When it turns back and it's above the level, that's when we can buy it, because this becomes automatically now a 50 point without even looking at it, you know? It just becomes the 50 naturally. So it has some relevance for us personally, but we're waiting because we're below the 50 and still the sellers are of course weak, right? And everybody knows it except people who try to fade the bottom edge. So institutions, they will buy the next leg lower probably. And you can too if you're aggressive enough and if you have small stops. I'm saying you can buy a small amount, right? But what is a small amount? I mean, for everybody it's something different. So yeah, we're just looking right now at the market and saying, let's go back to my other chart. We have this 4-hour order block now. We are in here, and yeah, we're ready to deal, you know, we wanted to go short because it's obviously pretty high compared to Nasdaq, SP 500, even Dow Jones Industrial and whatnot, you know, whatnot. So this could be also the 75, right? I'm just seeing it. Yeah, it is actually the 75, of course. So you get a bigger picture. This is like the macro picture. I know it's not much, but what you need on gold is really to pay attention to these key levels like the 78, 70, 750s, and even the 775, so the 25, so the quarters. So basically, these are also RGLs, right? And if you just think about it from a logical perspective, this is your swing high, this is your swing low, right? From 77, let's just say 77.50s is your bottom, right? And 70.75 is your top. Where's your measured move? 70.80s, right? And look what happened, sold off. I mean, it's not a big sell-off, but it's sold off, you know, so it could be, you could potentially just put your stop to break even, maybe pay your commissions and just sit it out, whatever you'd like to do. So this is really a powerful tool on oil, and it works really in every time frame, of course, because it's fractal in nature. If you take this swing high, right, 77.50s, and you take a low price of not 70s, but 75s, right? For example, 70, 60, 75. If you take this bracket, right? Look where your measured move is. The measured move is now a little bit higher, right? So you would automatically mark out this level for a bigger measured move, just like we previously did. So you see how it makes sense, right? At some certain point. And also, if you take, for example, just the 70 price, say you just take the bracket from 70, then your target would be here. So this is how the institution, not the institutions, but the floor traders actually trade. They always look at measured moves, you know. So this is something just to consider. I mean, it's not much, but you see, it's stopping the price. So the price is not going higher. I mean, it's also not going lower, but it means that something might happen to you. And of course, if you have like some good volume indicator, I mean, this is not the best volume indicator in the world, you know, but you can obviously see what happens in this candle here. For example, you knew, okay, price went down, the volume was increasing on the way down, and then a big candle came in, a red candle. So in this here, it's a red candle, but if you take the normal fractal, it's a green candle, obviously, but it's at a high price. So I don't know if I would have sold this. Anyway, maybe we can start to look for some opportunities into this topic. So just be aware that they might fade the 77.25s before they go lower, right? So it could, this is like your sell area now. It becomes a whole area of selling. So you just have to think about it. On your price, it's maybe something, it's a different price, you know. This is why I personally can't look at the crude oil, because it's calculated in rupees, right? So it's a little bit more difficult, let's say. And the volume is also different because it's the futures. So it is in real time. This is good, the good thing. So imagine you would have seen this here, right? Like the oil, and can I go back? Yeah, you see this volume here is pretty up high, right? But the oil volume isn't really that high. So you could compare these two and say, okay, you know, maybe I can start to look now and try to sell small amounts. Let's just say we sell small amounts, okay? Like this order block, when this closes, we press the sell button, okay?
Yes.
You just press the sell button once this candle is closing. Right now, this was the sell basically. Doesn't matter where you sold it, you just sold it, and your stop loss is pretty tight above this high maybe. Because it doesn't matter at the end of the day, you know. If you get stopped out, this is like maybe, this is a small trade. It's not like you're risking 10% on the trade. You're risking maybe, I don't know how much.
Actually, problem is in my market, I only trade with the lot size of one. not in fractions. So it always like bigger amount of gaining and bigger amount of losing.
Okay, so you mean you only can trade one lot, right?
Yes, one
Basically.
or in multiple of one.
Yeah, exactly. You're trading contracts basically. So contracts are measured differently because they're options, right?
Yes.
They're like options. So you have to pay a premium maybe, or
Actually, I don't have any instrument that buy in it, but that buy oils in like in fractions.
so you're
Uh,
you're splitting the whole trade. Or how can I understand? This is kind of hard for me to understand because I
Actually,
don't know it.
when you buy oil or gold, you buy in fractions, no? Like 0.1 lot, 0.2 lot, 0.3.
Ah, okay.
I can't buy it. I can't because I can only buy in one lot or two lot or three lot.
Okay. And this is way too much
This is the
basically.
problem. Yes.
This is way too much. Okay, I understand. If that's the point, okay, you don't have these. There is something called minis, I think, but
Yes.
there is no such thing as oil gold minis or oil minis. So, okay, these markets are basically gone from your list then. You should-
Actually, gold mini and oil mini is also available
yeah, it's
in the
available,
market.
but you have to risk a lot of money, you mean. So you
Yes.
have to trade one whole lot, and one lot
Yes.
is a lot of on gold because one lot is actually $1, and that's already $100
Yes.
if it trades from example from
Yes.
50 from 95 to 96, that's already $100, which is a lot, man, I'm telling you.
Yes.
So
Same
you
thing with Nifty also.
with Nifty too.
Yes, because if you see the trade we took, that was 1 minute chart and it gives almost $20 at some times.
Yeah,
So it must
true.
be a large lot, no? But that was my minimum. I can't do no more little.
Yeah, sure. Yeah, but if this is your trading style, right, then this is okay. I mean, there's nothing wrong with taking, like, for example, you could have potentially, I'm just saying potentially, I'm not saying you should have, but this would be one buy trade, and this would be another buy trade, and you would have two buy trades for the day, and the market barely moved. You know, you didn't even catch a trending market. This is the thing, because this was a top, you know, this is, you know what a top edge looks like, right? Like accumulation, slow moves, and rejections of the highs, And this is what they basically did at the top edge, because they already knew something was coming, you know, they already knew something was coming. And of course, they priced it basically in the markets, and boom, what happened? Price open, came down. This is like, people knew what would happen here because they were close to that level. They didn't quite hit the level here, the expiry date, not the round figure, you know. This was kind of shitty, because if you would have hit this level on high volume, you could potentially be a seller, you know. So from the close, even just imagine you have sold the close, right? The market is dropping down like this. You just made a fortune, man. I'm telling you. Over.
Yes, but this is also risky, no?
Yeah, of
Because
course it's risky. Of course it's risky. But
what if it goes gap up?
yeah, man. So okay, let's just stick to oil, because oil is looking like it's doing something, but also it's doing nothing. And gold is also at this bottom edge. And this is the good thing. We have this 5 minute bracket now, right? Like this
Yes.
is our balance area basically. And what we're gonna do is we take back our indicators. I'm sorry, I'm drinking tea, man, and my stomach is trying to adapt to it.
It's okay or
So
it's flat?
okay, so look, let's see. Let's then break down gold, because I think it's more likely that you're gonna trade gold than oil, right?
Yeah, I
Or
can
would you
trade.
rather prefer oil over gold? It really depends on your trading style too, yeah. But let's just look, and this is what basically the idea was, right? That this curve is moving down and the price is kind of making this type of higher hold now. So
Yes.
we get the higher hold, we don't get the bottom liquidity, which is actually really bad in my opinion, because I would like to see the top edge, bottom edge fading again. But now we have that right hand higher hold, and obviously the balance is against the sellers at lower prices. Imagine if you sold here, somebody bought here, the balance is against the sellers. but we can't buy it yet because of the moving average. So we just have to mark it and just wait for a push higher, maybe we can even try to short it at a measured move, maybe if we just draw in this area here. And this is what Ray is always doing. Ray is always, he says when he's coming to his desk and he's trading a pair, he's always looking where people are taking profits. So from the pre-session, right? So basically, if you're a seller here, you take profit as here. And if you're a buyer here, you take profit as here. And you try to get to that level, with every means, and every algorithm is just trying to do the same once it breaks in either direction. So this is what we actually look for.
But
Just like the,
looks like sellers are squeezing.
yeah, for sure. But on the larger time frame, of course, the sellers are strong-handed, the buyers are pretty weak-handed. But you have to think about it. There is somebody stepped in with somebody, or this could be profit taking. But this large candle here, you could have bought this for look how much it was. It went from, let's say, from 79s, right? You bought the close like 97s, all the way up to almost 99s. That's 20 pips, right? That's on one lot, $200. That's actually pretty good, just because you bought the close of a big candle, which is of course not what we would like to do. But I would like to see something like this, right? Like a 1, 2, 3 fade, because this is 1, this is 2, and if this gets faded, then I would like to buy, at least if the volume comes in. So, Ray just posted something, lows developing some upside value now, which is pretty good, right? Pretty good. Lows developing some upside value. That means lows, we have to watch for lows. So either it's gonna be slow here. I would just, yeah, it does matter. It's this low or this low. It really depends, right? But it has a little bit of upside value. So what we can look at the same thing Ray is looking, because Ray is obviously looking at the Euro USD and the real yields, and the real yields are the US 10-year, compare US 10-year yield minus divided by the US oil. So this should be inverted now, right? This is inverted. See? So actually, this curve here, this purple curve, this is the yield. So this should be inverted. It should be US oil divided by US 10-year yield, and now it's positive. So now you see we have, like, if you look at 5 minutes, for example. Hold on, let me
Price move around the 50 area many times. So when to decide that this is like price is up now for real above 50, because
50.
it moves around the 50 many times. If you look at the lower balance area and divide 50, so if you look the price moving around that 50 area many times, that is like confusing. Yes, the last two blue zone divide by 50. If I divide that zone by 50,
You mean this one here, this area?
yes.
So
So
it's basically the 25, right? So you would take this here and this here, like this, or because look, if you think about it, like from a standpoint of an commercial, right? Like this is what we actually talked about. We have these lows, right? And we have this high, but what you see is obviously a failed auction, right? So it failed to take out this liquidity. So it's still a lower hold, right? It's a lower hold, and therefore these buyers are pretty weak at the moment.
okay.
So you can even take the balance out of this here and go for a BSG squeeze trade off the sellers, if you really would like to, but I would just not do
Yes,
it. I would rather not do it because we are already pretty low. So what you would like
but
to see
if
is
you see the price is moving around that middle line many
this
times.
line.
So when to confirm below that? Yes. So when to confirm that price is above 50, because price move around 50 many times, as you say, market makers deal at the middle.
Yes,
So
exactly. you have to wait. Basically, you get more confirmation once you get below the 25, you know. So in here, you get more confirmation that it's likely going to squeeze is the word, because it's not like it's gonna be continue, it's not gonna continue to trend, but it's likely the balance is just against these people here who bought, right? So they will have to push price back to this level to be able to even come to this liquidity here, because this every fraction is liquidity, right? You have to think about it like this. And the people who sold here, they're in a pretty good position, right? Because they never got tested. These sellers here, they got tested, but they defend their position. And these buyers, they will just have to be tested again. So what we can say is, okay, we take, for example, the Euro USD, right? And the Euro USD is already pretty up high. Like if you go on a 5 minute, for example, you see the Euro USD actually was already low, but it didn't make a lower low. So we already can say, okay, you know what? This is what commercials look for on gold. Like they try to buy gold, but they need to accumulate. So this is what happens. They will likely hold the price down as long as possible, you know. They will try to hold it down, hold it down, hold it down until they can't. But for the time being, we need to have the best prices, you know. So we have to wait for this bottom to get swept and then potentially really get in. We really have to be aggressive if we want the best price. This is the problem. Sometimes we don't get the best price. We rarely get the best price.
Yes, like in Nifty trade. That
Yeah.
was risky.
Yeah, this was the Nifty trade was something else, you know. This was like it was textbook, literally textbook. So, but oil, for example, you see, oil didn't do anything because the balance is still against these sellers here, right? Even though Ray sold, and he made a profit, and he probably is selling again now at a higher price. He's not selling the same price. This is what you have to remember, because this is the same price. You're not going to sell the same price. You want to sell higher and higher, right, as comes up. And this is what this is what institutions try to do. They try to buy lower. As price goes lower, they try to buy it. So we don't know how low it can go, right? But what we can do, for example, is we can just go to a 5 minute now and maybe look for potential RGLs in this area, right? And you already can see a little bit of, you can see some actually. So I will just mark them out with, like, for example, this is the RGL in this little balance area, right? This was balance area. There's even this little RGL here where we are trading right now, but this is like a stronger RGL. Why? Because we also have this type of order block formation, right? So we know, for example, just do it like this, boom, and you already now we get the squeeze, right? Now we get the squeeze and we have our level. So we don't look to buy it in here because we know, hey, we have a key level in here. This is, you want to be really picky with the prices on gold, because gold can just smack through this level now and then just go buy side, you know.
So why should I buy a fade trade? But I should first wait for a sudden expansion and then I buy 50. And why?
Because it's a right hand hold, right? Because if you look what happened here in this balance area, this was a 50 pullback, right? And if I go on the 5-second chart, I know it sounds kind of stupid, but this is what the algorithms are really looking at. They see this high, they see this low, they see this fade auction prices rotating below here. They come back to the 50, price is exhausting. They just smack price below this low to take out this liquidity, and they can do whatever they want with this liquidity. Now you see it's actually forming a level 2, right? Because it just came back. And if you're really a really small time frame trade, you can wait until we come here, right? And if we come here, you can just be aggressive. You can be aggressive buyer. You can put a buy stop in here and a stop loss below this low. So this is really aggressive, but it works, you know, it works because look what happened actually, right? This is a rejection on a 15-minute, obviously. It's a pin bar, look. It just took out the liquidity, and now we're going probably for the squeeze. So we might not even make this full target, maybe because I just refined my zone too much, you know, maybe it isn't that big of a zone. Maybe this was the RGL here, for example. I don't really know what the RGL is, so you have to make it a zone, you know, like for example, if I take a 1 hour chart, it's probably going to be, of course, a bigger RGL, right? It's going to be the order block here. Look what happened. Like if I mark out the whole order block with the high, with the low, whatever, it's the last candle, and now you have a bigger zone to work with, you know. So if this is your trading style, I would say, like if you need bigger stops, for example, some people need big stops, some people need small stops. Me, for example, I like to trade small stops, you know, so just to be sure, because I didn't even take a trade today, you know, I'm still looking for a possible trade, and I didn't even take one single trade today, imagine. But you see, if we would have bought this one here now, this would be pretty good, right? I mean, even though, look, this is what happens with gold, man. You get this candle and it just drops 10 pips back against you. So you need to be careful with gold. I mean, gold is a good market, but it's also a really, how can I say? So you see, this is why we didn't sold this here on gold, on oil, but this is now a potential sell somewhere in here now, because it's a little bit higher and it's an accumulation, right? Right? It's the 1, 2, 3, and we also have to think about it like this. We don't sell randomly in, we try to sell the close of the candle because we want to see the volume forming, because the volume is mostly coming in the last 5 seconds before the candle closes. And look now, let's say we just sold here, right, the close of this candle. Now our stop loss is, I don't know, maybe here, who knows, this is our stop loss. So this would be our buy order at this point, and our take profit would be, or our first take profit would be here. So it's a 50-50 chance, right, at this moment. What's going to happen? We either get fully stopped out or we hit take profit. So it's either or basically. But just because it made a higher high on higher volume shows us that we can fade it. We can fade it, you know. It's not a guaranteed trade, but it's just a possibility that it's possible, you know. It's just all about possibilities, basically. So
This is first L1.
this is, yeah, this is even level 1 liquidity, because it can turn, of course, into level 2 in this or in the next candle, you know. So when it turns back inside here, this is somewhere the 50, this would be the 50 from the previous bracket. I mean, we can fade it if we have value, for example, in our favor, right? If we have something like the what is a good value? Euro USD is basically a good value, but at the moment, nothing is really a good value, you know. So we have to be mindful that the market is still, how can I say, adapting to the overall change, you know, for everything basically. It doesn't actually make sense that oil is going up and Nasdaq, etc., is going down, right? Even though it made a little high here, like, yeah, this was the 1, 2, 3 down. There was this RGL. This is what I marked up yesterday before I went to bed, I think. This was a measured move. It hit it here. It bounced a little bit, and it came back down again. I don't know what this was. It doesn't really matter though. Let's keep an eye on gold, man, because it could be interesting. So you see, basically, again, if they fail to take liquidity, right?
Yes.
Again, we have bottom liquidity, top liquidity, balance is still against the buyers, but we see a strong buy move from the low. So we're just waiting to see what they will do with the liquidity at the bottom edge. Of course, we would like to have our target was somewhere in here. I think it was something around 29.50s. If they make it, we don't know. But look now this, yeah.
If you see Bank Nifty, there is a different kind of setup there. Not like accumulation. Nifty Bank.
Yeah, I'm watching the SP 500 CNX.
This is Nifty. This is only Nifty Bank. I'm saying Nifty Bank.